Hello, it's part 3 of building a cash flow forecast. We covered the time horizon, right? On what period we're going to forecast for and how often we're going to do it. And then we've looked at the tools. Are we going to use some standalone software, or are we going to use the flexibility of Excel to build our models? Now we're going to look at how we collect the data. We're going to start with sales and the sales collections. You know, we invoice our sales to our invoices to our customers, and we record those as revenues or sales in our accounts. But with the cash flow forecast, what we're looking at is how often they pay us, right? And how quickly they pay us. Now, one of the things that you need to think about when you do this is go and have a look at the historical data. Don't just take the terms, because I've spoken to a number of business owners, and they'd say, yeah, customer A, he's a 30-day payment term, he pays us after 30 days. And they would build that into their forecast. When in actuality, what's happening is that customer A doesn't pay you after 30 days. He pays after 45 days, or he doesn't even pay you in full. He pays after 45 days and he pays 80% of what he's owed. And you have to go looking for it, right? You have to spend the time and the effort to go out and try and chase that money in. And it could be the same with customer B, C, D, E, F, whatever you've got going on. So it's important to figure out what's actually happening and how quickly and often that your customers pay you, and if they are in line with their payment terms. Now, I don't know how big your customer base is. You could have hundreds of customers. You may have a handful of customers. But what's probably the case is 80% of your money or your revenue comes from about 20% your customers. I would think you've got some really big customers, a couple of them, and then you've got some ones that are really good customers, but they don't pay you as much, or you don't do as much business with them, and then you have a whole load of others underneath that, right? So what I would do is I would start with the biggies, and I would go through them, and I would look at how those big customers pay me and how often that they pay me, and do they pay me in line with my payment terms or not. And I would build that into the forecast. So if they pay after 45 days, that's what I would build into my forecast, not the 30-day payment term, but the 45-day payment, 45 days actual payments from these people. And if you find that they're paying 80% of what you're owed, you build that into your forecast as well. Now, I'm not saying that you just live with that, but what it means is that you're not overestimating even, breaking my teeth in for a horse, not overestimating the money and the collections that you get in. But what it does also do when you do this exercise is you identify issues with your customer base. Then, as a management function, you would go back to your customers, or these customers that you have problems with, and you'd kind of explain the situation to them and say, look, this isn't what we agreed on. This isn't the terms and conditions of our contract. Now, if you don't pay me on time, you can impose penalties or whatever, things in which you can deal with. That's basically up to you and how you manage your business and how you deal with your relationship with your customers. But for the cash flow forecast, you build that into the sales collections profile. Otherwise, what will happen is that you will overestimate your collections, and that puts your cash flow completely out, right? So go back, look at the customer data, look at the details and of what's actually happening, and build that into your forecast. Now, I cover all this in my course that I do. I'm not saying you have to take the course. I'm not saying you have to. But if you're interested in learning more about, improving your knowledge around cash flow management, cash flow forecasting in the business, tips and tricks that are put in, quick wins that I include in there. It's a 50-hour course. It's about 30 something videos, but it's fully comprehensive. It's helped a number of small to medium-sized business owners. it's worthwhile looking out. I also have an ebook which covers the 7 main strategies that every small to medium-sized business owner should know when it comes down to cash management and cash flow forecasting. So that may be worth looking out for. Or you can just follow me on my blog. I have a blog which I post to regularly. It's the link. All these links will be in the description below. And so I put tips in there. I write about cash and cash flow because that's basically me. That's what I do. I think it's the most important thing, right? Especially for a small to medium-sized business owner. So yeah, why not check it out? It could be worthwhile. Hope you do. And like I said, there's no obligation. If you want to take the course, click on the link, book a time with me. We'll have a 30-minute conversation. We can talk about your business, what's going on. Maybe see if the course can help you. Maybe see if because as part of this course we have a group discussion once a week where you'll be able to talk to me directly, ask me questions, and I'll be able to help. So maybe it'd be worthwhile. Who knows? Check it out. Why not? It's free. You've got a couple of free minutes or whatever. Why not have a look at it? But like I said, going back to the thing, make sure that your cash flow collections reflect what's actually happening in your business, because you don't want to be saying that you got too much cash when you haven't. That's it. See you next time for looking at material costs, how we build those in, and putting together the cost profile of the cash flow forecast.